Welcome back, friends. So we had a tumultuous session on Wall Street yesterday. We saw the US markets sinking at the open and then recouping after that. We saw many things which were confronting the US markets and which have come to play in the minds of investors since quite some time. For example, we have number one, interest rates higher for longer. We have had the issue of number two, we have quantitative tightening. Number three, we have mismatch of assets, loans, and deposits and advances. So assets and liabilities, there's a tremendous mismatch which is coming into play once again. Four, there are risks associated with the monetary authorities tightening rules for these regional banks, and which further deters or impacts their ability to lend money. All this is coming to make an unholy cocktail, and this is also going to continue to play out in the US markets. There could be periods of recovery and reminder of the party which is still not died down. At the same time, friends, you'll see a situation where the markets will take into cognizance various factors which will impact these regional banks from time to time. The Canadian note is pertaining to the commercial real estate and the problems that people are having to work out of their own homes rather than in offices. So the impact is there on the commercial real estate, and that is also something which Moodys has taken into cognizance while downgrading these 10 regional banks. Interestingly, the S&P Regional Bank Index was up 20% before the quarter end, and what seemed like a quiet summer for these regional banks has turned to be just the other way around now. Well, don't forget the fact that the regional bank spreads remain above the high yield spreads even now. Secondly, the options on some of the regionals imply there's a 15% chance of an FDIC seizure. All this does not augur well for the health and for the investment perspective of regional banks. The bulk of the Q2 earnings has been about released. Moodys is therefore in possession of various balance sheets and income statements, and therefore they have come with this downgrade announcement at this point of time. There are many other factors which are looming on the horizon, friends, and which are also playing on the minds of investors. Like the 10-year yield over 4% is not a very happy scenario. There is an issue of monetary policy rejig that is going on in Japan. There are issues of issuance of over $1 trillion in treasury securities in the United States. All this is going to lead to a situation where the yields could continue to tick higher, and as long as this continue to tick higher, all these headwinds which are there for the regional banks will come into play even more. So you will see more pressure on the margins, more pressure on regulators to come out and create more risk. Asset liability mismatch can increase, and you will also find a situation where these banks may not be able to confront the situation, and how much is enough is going to be an issue, just like we saw in the case of Silicon Valley Bank, where we had many issues that how much money would the investors want to pull out. There were definitely headwinds in terms of concentration risk in the case of Silicon Valley Bank. There were also uninsured deposits. These were definitely there. Yet such a big run on the money in such a short period of time is something that can happen once again. And I think the writing is on the wall. Friends, right now the party has been going on, and I have suggested from time to time enjoy it, but definitely there is a looming risk on the horizon, not only of a US recession. The reason being that wages are still not coming down, and the only way for the wages to come down is the economy going into recession. So it's not so straightforward a soft landing as most people imagine it to be. And now we have more trouble coming in for the regional banks. Fitch has already downgraded. We have also had the Moodys downgrade, and S&P could be next. Friends, to get to know more, and a big turn is coming in the markets, get to know what exactly and what point of time all this can happen, please do join our Prime or Prime Plus groups right away. As far as the US markets are concerned today, I believe, and let me not leave you disappointed, let me give you a little bit of my analysis. And please don't forget to do your homework as always before you invest your very hard-earned money. But as we step forward into the session, like once we cross 11 o'clock Eastern time, New York time, you can see some more negativity start coming in the US markets. Friends, to get to know more and a more detailed analysis of where the markets are headed, where the big turn is coming, please do join today. And why don't you do it right away? Number to get in touch, 9820861044. You can also alternatively email us at globalmoneyinnvestor@gmail.com. Happy investing. Have a great day ahead. But remember, as far as I can see, more trouble in the afternoon session for the US markets. Happy investing. Take care. Bye-bye.